What's going on, traders? It's day number 20 of the $5,000 account challenge, and you see the big red here. It is the first red day of the challenge. I'm down $647. What happened? I took 3 trades. All 3 trades were losing trades, but when I scroll back and look at the history of this challenge since we've started, I have had 2 days where I've not taken any trades, day number 10 and day number 3. Every other day for the duration of this challenge has been green. Not all big $1,000 day greens, but green nonetheless. I show you this not to brag, but I'm 20 for 20. 0 red days, and I believe the reason why that's happened is because I've been locked into this flow state of mind where I'm able to see setups clearly and identify opportunities before they even form, and I'm just fully focused on my trade and executing it to the best of my ability. Now, not all of my trades have been winners, but my risk management has been on point, which leads me to something that I really want to say to all of you. Manage your risk. Too many times I've seen days like today, with me taking 3 red trades back to back to back, I've seen people following into those trades and blowing 40, 50, 60% of their portfolio. What kind of risk management is that? I even said it before market open today that if you're going to trade the same day expiration contracts, you need to size down and make it a point that if you're green on the week, if you're trading Friday, just protect capital. If you're up 1,000 on the week, don't lose more than 1,000 on a Friday. End your week green, because green weeks lead to green months, and that's how you're going to get green years. That's called consistency. But you will never get there if you don't know how to manage your risk. So here's the first trade that I took. It's on Amazon, long idea above $233. We're on the 1-minute time frame here. We get the opening consolidation a little bit. That moves up. Then we get a perfect pullback hold of 233. This candle starts to print green, and I took my entry there. This is picture perfect for my strategy. Wait for the break. You get the break, wait for the pullback. Okay, now we buy the dip for the run higher. Not every trade works, and this is just one that's unfortunate. It didn't work. Now, because of my position sizing here, I was able to let this drop further than 10% because I was trading the same day expiration contracts, and I was still fine from being down on a monetary standpoint because I sized properly. When you're trading the same day expiration contracts, there is 0 room for error. So a way to mitigate your risk is to size down. That's called risk management. Nonetheless, Amazon drops, sells off, and I have to wind up cutting this trade. UNH was the next one on my watch list. Long idea above 304. Opening dip that then gets bought. That rallies all the way up to the high of day. And then I drew a trend line at 303 because 303 is the previous high of day. And that's an old point of resistance. Should act as a new point of support if this is to continue higher. If that point doesn't work, then you've got another point of support down here that could potentially work, which doesn't. So I wind up taking my entry here, though, right as this is at 304, trying not to chase the move, waiting for the dip, another kind of picture-perfect trade, if you will, in my book, where I'm following my strategy as I normally would. But in this case, here's what happens. I do wind up holding this one for longer because I'm giving it room to maybe bounce off at this price point. When that doesn't happen, it sells off further, and I do wind up having to cut this position as well. Now, in the same case with the Amazon trade, I was willing to give this extra room to move against me because of my position sizing, because I had managed my risk. At this point going into the trading day, I was up $4,000 on the week. So yeah, I'm down $647 on the day, which might seem like a lot, but when you think big, grand scheme of things, down $647, up $4,000 on the week, your net profit here is what? $3,300, $3,200? This is what I mean when I'm letting these positions roll against me. I can afford to let that happen. But some of you out here, Trader Joe, just be following me into these trades knowing that they can't allow this loss to get out of hand, and they do it anyways, and they're not even sized down. At any rate, UNH does wind up breaking this downtrend trend line. It gives us a higher high, it gives us a higher low, the higher low holds, it gives us another higher high, where I purchase a position again, looking for this to rally back to and through the high of day, thinking that the trend has been reversed and it's back on the uptrend. And unfortunately, right after my entry, it faked me out with a drop candle, which I sold, and then it rallied back up. And then later on, that's when you get the trade that rallies to and through the high of day up to highs of 310. So 3 trades, all losing trades, all going long while the market was selling. And somebody asked me, why are you going long when the market is selling? And I just sent them this chart. short. I was like, this is why. I had the right trade ideas on Amazon. Unfortunately, it just didn't work out. That happens sometimes. And on UNH, unfortunately, my timing was just a little too early before this run got pretty clean. So it's a red day for me in the $5,000 account challenge, down $647 on the day. No big deal. I have the confidence that we will make that back. But if any point during this video you felt upset by the words that I was saying, maybe you started to take it personal, then you need to start reflecting and looking at yourself. I'm saying this to help you, not to hurt you. Risk management is so important. And if you never learn how to do it properly, you're just gambling. Okay, that's it. That's all that I have for day number 20 of the $5,000 account challenge. I do hope that the videos helped. Thank you for your time, and we'll see you on the next one for day number 21 of the $5,000 account challenge. Cheers.